In today's video, we're going to be talking about a very popular topic, partnerships. We're going to go over the good and the bad. Okay. There's a lot of successes with partnerships. However, there are a lot of negative, things that go on in partnerships, and that's affecting our communities in general. Especially in certain groups that I'm not going to name right now. We have quite a few groups that are purposely, defaming other people and whatnot. And we don't want to be the cause of that. We want to do our own due diligence. The goal here is to understand the power, partnerships, and then we're going to look into a few things for due diligence, things to be aware of, and then we'll have some, good and failures and examples of certain situations, as practice for us to kind of engage together to determine if this is something good or bad, and then you guys can determine that overall. With that being said, though, when I say partnership, I don't just mean a business partnership. Okay, I'm going to include connectors, JV, private money lenders, and private money partners, gators, etc. Right? Because all of these are a form of partnership. You are doing business with somebody for with a certain type of risk maybe involved, for in return a certain kind of type of profit. Okay. And so whether that's pooling resources, money, skills, risk management or sponsorship, diversification, maybe an increased buyer power, whether that's leverage or competitive advantage, leveraging somebody else's, existing knowledge or whatever of a certain area or market. Enhanced decision making, because when you collaborate with somebody who knows more things than you do, it makes things easier for yourself, does it not? And then, of course, problem solving, scalability and growth, access to networks. All this happens when we form partnerships. And whether you're in Sub 2, you're in Gator, you're in Astro, you're in TTP, it doesn't really matter. So what's really, really important is to understand, well, what is something that's good for us and what is something that's not. Everybody's going to come into certain scenarios where there's bad moments. Does that make you a bad person? Well, it depends, right? So an example of, let's say, a few ways how we do deals in real estate is JVing, right? We JV on a deal, one brings the deal, the other one flips it. Or maybe you're a private money lender and you want a private money partner on a deal, one operates it, one funds it, right? If, let's say, you have really good credit, well, you're going to sponsor that deal or that loan for somebody else to operate it, right? And so, like, there's multiple ways of partnering. So now, as I mentioned before, we're going to go into a few things like due diligence, right? Because, like, again, I see this all the time. People doing deals and they're not doing due diligence, and they're getting them set up in a certain circumstance, whether it was their fault or not, right? Paperwork, so forth, right? But the real motive at the end of the day is for every single one of us to be able to do a deal together, but also at the same exact time to get that profit, right? But if we don't set clear, objectives and goals, and let's say have some sort of legal structure and agreement, right, to put that bind together, well, then what are we aiming for, right? Like, do we have those set up? Another thing you might want to consider it when you're doing your due diligence is like financial considerations. If shit hits the fan, right? Well, who's in charge of that financially? Who's responsible for if that deal falls apart? Who's the money person, right? That's why we have roles and responsibilities, right? When you do a JV agreement, or let's say you're a connector, right? Well, you're just connecting the dots at certain points. But it's also your job to do due diligence on both parties as a connector, right? Same thing if you're JVing. Are you not going to do due diligence with your other JV partner? If you're a private money lender, well, are you not going to do due diligence on a private money deal, right, before you invest? So it all goes back to this. Well, what's your role? What's your responsibility? What's their background? What's their experience? You want to check all that, right? Risk management. Well, every deal has risk. There's not a deal out there that doesn't have risk. Like, even a Gator deal has risk. And that's really important to determine is if you're up for that risk. And in order to make money, you got to be up for that risk. So the next thing is like, well, what exit strategy are we doing with this deal? Are we flipping it? Are we renovating it? Are we just, assigning paperwork over to somebody else? If it was like, let's say a simple deal, like what are we doing with this deal? And are we all set with clear objections of that goal? Right? Because if we're not, then what are we doing? Okay. Communication and conflict resolution is really, really important. Okay. Okay, let's just say there's a problem that arose. Did you put that in the paperwork where if this happened, that I can do this, right? If your partner screwed up, then you can do that, right? Is there proper ways of communication between you two as a partner, as a connector, as a JV, whatever, private money lender? Is there proper ways of communication? Was it set expectations? Because let's say I do a deal with any one of you guys right now, and we sign agreements and everything, but if I didn't tell you in that agreement that I need to communicate with you every 2 weeks, I'm automatically going to assume it's once a month. But if you want me to follow up with you, bi-weekly or once every week, or hell, once every 2 weeks, which is highly unlikely, like, then you have to set those expectations, right? And then, when problems arise, we want to be the ones that have those solutions written down as well for whenever a problem that comes up. Next would be like, say, the market and property due diligence. Sorry. A lot of lenders, whether you're a gator or private money lender or a connector, I'm sorry, but you guys don't know how to evaluate deals, right? And then you get yourself up in a mess, right? Because you invested on a deal that was a bad deal because you don't know how to evaluate a deal. This is why we went the last 5 weeks going over deal basics. So whose fault is it if a deal gets screwed up and you invested in a bad deal? Sure, that someone might have ghosted you, or the deal might have went into foreclosure, or whatever it may be, but whose fault was it to begin with? It's both parties, right? You invested in a bad deal, and the person that brought the lender to the table, let's say, didn't evaluate that deal, and the person that wants the money doesn't understand how to do a deal. So it's everybody's fault. And of course, the ongoing management and monitoring of the deal. Okay, like those are all really, really, really important. And when it comes to like doing your due diligence on a particular deal before you partner with somebody, set those expectations. Now, we say this all the time: do your research. Before you make your decisions. Yet not everybody does it. Okay. And even if you do, sometimes that research comes out clean, but later on people show their true colors. Does that mean we shouldn't try? Anybody who's listening right now, like if you do your research on somebody and they come out clean, but there's always going to be the chance that you don't know what's going to happen in the future. Are you going to do deals, or are you going to give up?
Do deals.
Okay. Now,
Or do deals. Have to, right?
Absolutely. Right. Like that's the only way you're going to grow. Right. Regardless if you fail or succeed. Right. Like we'll get into what happens if you fail and what happens when you succeed. Right. But like the only way to grow is to move and do something. And let's say right now I partner with you, Steve, on a deal. I don't know what your background. I don't know your history. I can do my research. I can look at social media. I can ask people, right? But no one's going to know what you do behind a computer, whether you're lazy or you're someone that takes action, right? Like, I don't know until we actually do a deal together. We can promise whatever we want to promise.
Right.
But the reality is we don't know. But we still do those deals because there is a potential for a higher, output, right? We're doing all the work. We're doing all the inputs. We expect a certain output, right? And so it's like, well, does that mean we shouldn't try? Well, of course, the obvious answer is no, right? We should be trying all the time. But money does change people, right? I like this example because, like, I say it all the time. You meet a girl or a guy, right? And let's just say you're in the dating phase, right? And usually, what happens is they're on their best behavior for the first 6 months. Tell me if I'm wrong. Most people, when you meet them, they're going to be on their best behavior for the first 6 months. Now, in certain circumstances, it could be shorter, could be fast, longer, whatever, right? But that's just an idea. You can go and look at somebody right now that you want to plan on doing a deal with. No bad deal history whatsoever. Then they default on a loan, on a deal with you. Whose fault is that? You did your due diligence. He has a good track record. Whose fault is it? It wasn't his fault. It was a third party. A hurricane came through. But everybody lost their money. Is that someone's fault? Or is that a natural disaster? In that circumstance, it's probably a natural disaster. But the one that's operating it typically is the one responsible, for it whatsoever. But that doesn't change the fact that we all lost money and we knew the risk that could happen, right? Now, let's say there's someone that you meet and they have really good work ethic. You can see it. You see exactly what they're doing. They're all over social media. They're making posts. They're doing deals. They're doing whatever. You partner with them. You start making money together. They get lazy. Did you anticipate that? Probably not. Because previous historical, like what's shown in front of you from what everybody's saying is this guy is awesome. He's all over the place. Like he's doing deals left and right. At the moment he's comfortable, he's lazy. There's people like that. And then there's those that, promise you a lot. And of course, the expectations are not met. We can all talk. But who are the ones that are actually doing? But again, they could only be doing a certain amount just in the eyes of the public. Doesn't mean they're actually doing stuff. And then let's say you want to do a deal with a private money lender. Does it not happen where you get a confirmation from a lender and, 2 days later, 2 days before your deadline, they say, oh, what? Sorry, I can't fund your deal. How would you feel? Those situations not happen every single day. You're going to tell me that all these big people, whether it's me, Pace, Jamil, Brent Daniels, anybody that's in as a leader in the space, has this never happened to them? Any one of these circumstances that I just mentioned, these examples, do you think this is something that doesn't happen to them? Have you seen anybody with a perfect track record? Let's go with that. Perfect track record. Oh, Grant Cardone is known for doing shady shit. Every single person has a bad track record, whether it's minor or big. But that doesn't mean we intentionally do it, right? Because it's known the bigger you get, the more lawsuits, that are going to incur, whether you like it or not, right? Because people get negative or envious or whatever, right? To whatever your circumstance that you have right now. But just be the better person, right? If a deal's falling apart, well, be the one that goes there to assist and do whatever's needed. Because whether you like it or not, right? If you do your best is still not what's required. That's unfortunate, right? Your best is not what's required. If let's say a lender is funding one of my deals, they don't care what my best is. They don't care. They want their money back, right? They're going to want their money back within a timely manner, right? And that's that. They don't expect anything less. But on the other hand, did they not understand the risk that they were getting into? Right? It works both ways, though. So I have 4 businesses that I want to talk about. Right now, these are examples, right? And I want you guys to let me know if any of this has happened to you. And we'll kind of like chit chat about it. So let's say right now you partnered with 4 previous people. Whether you still are in business with them or not, that's the different story. So partner B, because you're going to be partner A here. Here, let me go ahead and share my screen. I think this will be funner if I just share it. So partner B, you partner with a dispo company to dispo your deals to wholesale. We'll use something small here. Partner C, you're going to do it with a private money lender or gator. Partner D, you're going to do it with a storage unit facility or any type of business. Partner E, you're going to do it with a fix and flipper because you want to flip deals. Now, any one of these things can be a success and any one of them can be a failure. What determines whether something's a success or a failure? Usually the people that's involved. So let's go with the first one, the dispo company. If I sent you a deal, let's just say you're a pro at dispoing deals and you're a company and you charge me, let's say 50%, 40%, 60%, whatever it is for the deal. And I send you a deal. And I know for a fact it's a deal, you know it's a deal, and it doesn't get dispoed in a timely manner. In fact, it doesn't get dispoed at all. What does that mean? Who's at fault here? The reality. Go ahead, Mike.
I was just gonna guess, but I would say you said that it was a deal and you've done deals with all of them. I would think that it's probably gonna be the dispo company because someone didn't follow through.
Okay. Well, what if I told you that if you had 10 good deals, all of them are good deals, you can confirm they're good deals, and you're still only going to move 70% of them. Does that not change things?
It definitely changes things.
So we looked at it from one angle, right? And we said, okay, well, it should have been the dispo person's fault because it was a deal. But there's plenty of deals out there that don't move. Then other people pick them up and they sign them or they finish the deal, right? For whatever reason. Time wasn't in factor. Marketing was done properly. It's happened even internally in part of my dispo. It's like, it's a really good deal. There was no sense whatsoever it shouldn't move, but it didn't move. Nobody was interested in buying at that moment in that particular area. It happens. Now, you guys might say otherwise when it comes to creative deals, but I'm just using an example of a cash deal. There's probably a higher chance of it being disposed. Now, of course, let's say you worked with that dispo company. They disposed your first deal. They disposed your second deal. The third one, they failed to dispo. Most people would stop working with that company. But why would they, right? The reality is you couldn't dispo better than them. You couldn't even dispo better than the 70%. So you hired them or you outsourced them, you partnered with them, you JV'd with them. So what makes you think you can do it any better? If you know that the industry standard is 70%, unless because you're a beginner, you're automatically assuming that every single deal should be dispoed if it's a good deal. And that's the case, right? Deals are not always going to move. You can't blame somebody. Now, if let's say you sent 10 deals to a dispo person and you knew 100% that they were deals, and maybe they dispoed 50% of them or 40% of them, well, yeah, you might want to look for a different company at that point in time. You still made money, right? Maybe not as much as you wanted to, but you'll probably look for a better company at that point, but you gave them enough chances. Because at the end of the day, whether it's an agency, whether it's a dispo company, whether you're paying somebody to do social media marketing for your company, someone else is a third party, someone is a partner that you're relying on, they're going to give 100% that they can give. Doesn't mean it's enough. That's why there's tons of agencies out there. But what makes an agency better than a partner? No difference, honestly. So you should set those proper expectations. Let's say you go find a dispo company or a dispo partner. Well, set expectations. Tell them, hey, we'll work together on 10 deals. The goal is to hit the average, the standard, 70%. If we can't do this, then, I'll probably end up looking for somebody else. Does that seem fair? Is that fair for everybody? Mike, you're doing deals in Florida and you plan on wholesaling. If you have cash deals, well, there's plenty of, wholesale companies out there that'll help you dispo. So many of them, right? It's like, there's so many people, but are they going to be 70%? Who knows? They could be 50, 60. Are you okay with 50 or 60? Because you can't even do 50 or 60 right now, right? So does it really matter if they're perfect? No, it doesn't. So here's an example of a private money, right? Again, same scenario. You lend on a deal. You get it back on time, you get a profit. You lend on a second deal, there's a slight delay, you're going to gain a profit. You lend on a third deal, there's a major delay, hard money lender forecloses on that deal, and you lose all your money. Guess what? True story. Right? Did you do your due diligence? Well, of course you did. Yet there was still an issue, right? You did everything you could. You vetted that person. And the deal still didn't work out. So does everything work out? Does every single deal work out? No.
No.
If one bad deal happens, if we're lending money or any type of deal with a partner, with whatever, connector, private money lender, does that mean we quit? We quit real estate altogether?
No.
No, I can't.
Yeah. So just remember you partner with them, knowing exactly what that risk was. Because I get this all the time, people DMing me and they're like, Mo, I invested with this person and they ripped me off. I'm like, are they still in communication with you? Are they not ghosting you? They're communicating, but like, they're not giving me any real answers. Well, they probably don't have an answer for you. They're trying to figure out the situation just like you're trying to figure out how to get your money back. As long as they're not ghosting you and telling you to fuck off, right? They're trying to fix their situation. You think they want to be in debt? If someone wanted to be in debt and wanted to steal your money, they would just block you on your phone and never communicate with you again. Don't get me wrong, that happens too. Like, that shit happens all the time. Not in our communities too much, in sub 2, but like it happens outside. And so I've personally lost $500,000 on lent money, but I've made more. Does that make me overall a winner?
Yes.
Yep, sure does.
But does losing $500,000 make you feel good?
No.
No.
Well, what if I were to examine this as a business? And if I knew in order to make $2 million today, I have to spend $500,000. Is that not a good investment?
Yep.
Yep.
What I learned in return, though, not to deal with certain people, do due diligence a different way, right? Vet people stronger, right? Don't just go with your gut, go with the numbers. You learn things along the way and you start minimizing things along the way. That doesn't mean you're not going to lose money. You're still going to lose money, no matter how good you are doing due diligence. Because here's the reality. The better deals that you make the most money are the riskiest. But we like doing them because we're investors. The difference is there's some investors that cry afterwards and blame everybody else. And then there's some that are okay with it. I'm one of those that are okay with it. You know why? Because I know I'm going to lose money. And yes, I've had to start from scratch before. Plenty of times. I'm sure there's plenty of other people in here that have had to start from scratch multiple times. And the reality is, if you're an entrepreneur and you haven't started from scratch at least once, well, then you were probably spoon-fed. Because it doesn't always work the first time.
Nope.
Let's look at another example. So let's just say you partner with a storage unit facility. You acquire it together, you buy a business together, things go smoothly. You set proper expectations, responsibilities, roles, yada, yada. His responsibilities, get the clients, the new clients ready, cleaning out, maintenance, making sure that when you market to bring in those new clients, that it's ready for them. The storage unit is clean and ready for a new client to take on board. But if one party screws up, right? Like just like the marketer, if he doesn't market and bring clients to a vacant storage unit, well, then you're not making money. You're losing money on that month. But on the opposite side, if the client comes in, their storage unit's not ready, when they leave, they're not coming back. You lost reputation. But let's not stop there, right? Let's just say he also steals money too. Well, there's multiple ways you can bring legal into this. I'm not a big fan of legal unless, honestly, someone's seriously done something wrong. Usually when it's above $500,000, right? I typically don't bring legal involved. Usually I just do it some peaceful way. There are ways. Now, this was a smaller storage unit we bought together. Doesn't mean it was the right way to do it or not. I just felt like it was easier at the time. So we parted ways. Gifted that headache away to the partner that stole the money. Ball, peen, hammer. Not sure what that means. Oh, kneecaps? No. So what could I have done differently in this scenario? Oh, there's plenty of things. I could have went to legal. We could have distributed assets. We could have done so many things, right, with this. But typically when you're done with somebody, you're done with somebody. You don't want to deal with them, especially when they steal from you. You could care less about the asset. You can care less about the money anymore. You can care less about the headache of going through legal. And sometimes you just want to get rid of something. By the way, no history of theft. The nicest person in the world at first. No legal or slander involved. None of that was necessary. Expectations were set, but we still lost. Fun times.
I've been there.
Yeah. But we still get people to this day that do one deal, and it could be something small, as someone connected me to someone that didn't know what they were doing, and everybody complains. We're not here to complain. We're here to make sure things are positive, right?
Right.
Have that positive mindset, because like if you have a negative mindset, well, that's only going to lead more negativity for other people, and no one's going to want to do a deal with you, and you're not going to move forward. The only thing you can do in a situation like this, honestly, is just like put it behind you. What can you do? You can fight for it. Sometimes things aren't worth fighting for. Isn't worth the headache, isn't worth the reputation, right? That comes after all that. And then we'll go with, the typical one. Now, I partner with a lot of people. I partner with a lot of people when it comes to doing deals. I'm not here to mention names, right? But like, let's just say responsibilities were separate. We're managing multiple, acquisition, disposition, fix and flipping, multiple operations in one business. This went on for a while though. Responsibilities are separate. let's say the one partner project manages all the flips. I mean, he's responsible for that. The other partner is marketing, acquisitions, and wholesale. After the first year, we make a shit ton of money. Wholesaling and flipping, doesn't matter. Both do go really, really well. You make $1.5 million. Great, that's awesome. Second year, one of the partners decides not to show up to projects. What happens there? Causes delays, causes a contractor to steal. In a way, it's not really stealing. In a way, it's negligence from the partner, right? For not showing up to the property and just paying them in advance. So how else can you steal that kind of money? But anyways, he used the same contractor for every single project, which means he's getting, and by the way, we are not in the low end housing. We're in high end housing, luxury. So you can imagine the price tags on these things. Multiple projects, one contractor gets a large sum of money and bye, disappears. What do you think that does to a business? Can anybody in here handle right now a $300,000 loss? Can anybody in here handle it?
No,
No.
Okay. So mistakes were made. Laziness happened. I got the typical, I did my best, from the partner. That's not what's required, right? Because your lenders don't care. There's lenders on this deal, whether it's hard money, private money, right? People panic. People are like, oh no, shit happened. Oh, well, they don't realize you just put another contractor in there and you get to work, right? And you fix it. You fix the problems. But you're a partner with them, are you not? Well, again, whether you're JVing or you're connected, because some of these deals were JVs, some of these were actual partnerships. It doesn't really matter. You're still technically on paper somewhere. You're responsible. So if you see a partner that's in that position, well, it's of your best interest to go and help them, by the way, regardless of your disputes. You can't just shift it there and say bye-bye, and leave in this circumstance, even though it's probably in the back of your head. What do you do in this circumstance? What would you guys do in this circumstance? I'm actually curious to hear your guys' responses on this.
Take the project over myself and get it done. So that,
How would you take it over yourself?
well, that I don't have the experience, but I mean, I'd find a new contractor, find more money, and get it finished. That's what I have to do.
That was exactly what was done. That was exactly what was done. But what does that do to that business? Because by the way, I'm a very big believer in, I'm sorry, but money stays in one business and it doesn't go from one business to another. It also doesn't go from my private money to a business. Because what happens if you do that? Dominoes.
Yeah.
Every single one of your business, that's the last thing you want to do.
and money's supposed to stay separate.
Yeah, separate. You never put all your eggs in one basket. You learn a few things along the way. You do business. You do your first business and you invest every dime you have into that business. Cool. Well, guess what? 4 out of 5 businesses get shut down. That's a good idea. Put all your eggs in one basket. But anyways, so that's one solution. You get to a point where it's like, well, why is this partner even here? Right? What are they doing now? Beneficial. But what do you have to do in this scenario as the other partner, as the one that's responsible? What do you have to do? Besides going and, going getting more money and hiring a contractor, like what do you need to do to get out of this? Because it gets worse, by the way. Hard money lenders come and say, oh yeah, we want to foreclose. What does that do to private money? Do you think
Tries
they're
up.
you
Yeah,
think they're
they're
going to
gonna-
get their money back if that
Nope.
happens? One mistake, especially if it's from a partner whose main responsibility is to do something major in a business. If they are lazy, things fall apart. So just remember this, if you're going to partner with anybody, make sure you set those proper expectations. Because here's the thing, he was project managing. I trusted, but I did not verify. So therefore it makes it my fault in that circumstance. His fault for the damage, my fault for not being, verifying exactly what's going on. But here's the thing. You do so well for a year. Do you think something like this is going to happen?
You would expect it.
You would expect it or you wouldn't?
You would not expect that, no.
You would not.
The money train going.
Yeah, I mean, it's always good, to keep the money train going. Now, luckily, two of those properties, with enough hustle and bustle and they're on the market. There's no problems. They're waiting to sell. Are the lenders going to have to wait patiently? Yes. Do they understand the situation? Yes. Right. They know everything that's going on. Are there some lenders that are super pissed and mad? Absolutely. Can we do anything about it? I mean,
Nope.
you can go try refinancing a $3 million house. Good luck. Not when you have already technically hard money and private money that reaches a certain percentage and yada, yada, yada. And it's already been delayed hard money and all this other stuff. It causes headaches. It'd be easy if it was just a typical hard money loan, you refinance it out later. It'd be easy. But when you're in delays like this, it makes it almost impossible. Nobody wants to do it for you.
In this expectation, how long a delay are we talking about?
Let's just say your typical 12 hard money lending contract is 12 months. We're talking about 16 months later, 18 months later. A project that should be done in 10 months, let's say lasts 18 months. Fun, right?
That's a lot of late fees.
Yeah.
Yeah, forget the late fees. There's enough margins in there to break even or, at least make money.
Yeah. Well, on your projects, yes.
Yeah. But like, it's not about the money here.
Yeah.
Like, honestly, fuck the money, right? It's like the headache that gets involved with these situations is more than any dollar amount.
You're right.
And then, well, we haven't even talked about the third one. Third one is, it's in the process of renovation. It needs still 100K for an extension of a hard money loan. We already got it funded, but like, it's an escrow. But like, it's beside the point, right? You should not be in these circumstances. Trust your partner, but verify what they're doing. And this is firsthand experience, right? What do? If shit hits the fan right now and your hard money lender at one of those properties that's on market says, I'm foreclosing on you, what do? Let him foreclose?
Mm.
These are tough questions because you guys haven't been in this situation, but this is the reality when it comes to doing bigger deals.
Yeah.
I mean, I'm okay at the end of the day. Some people might call me selfish. Some people might call me whatever, cold-hearted, but like, I'm okay at the end of the day. I will go to sleep and I will wake up and I'll do everything in my ability to fix the situation, no matter what. But I'm not going to pull a dime out of my pocket because the business has a responsibility. Just like if you started a business right now and it was bleeding money, would you keep funding it?
Not if it's not going to succeed, no.
Okay, well, in this circumstance, if you know this partnership is ending, would you do anything about it?
If the partnership's going to end, I would try and find something else, some other way to make it work other than the partnership, but try and make
Oh, no, there's plenty of ways to make money without this partnership. Don't worry.
Yeah.
You know, I have other people that I'm flipping with. I have other people we're buying properties with. I have other people that we're JVing and lending money on, right? Deals and money is not a problem. But you get in a circumstance. So here's the nice thing, right? When you get into real estate, you can JV with everybody. And you're going to find people that are good and bad. Till this day, this is my first real estate issue. But I have, let's say, 4 other strong partners that I do deals with. Perfect. Perfect. So that's what, 1 out of 5?
It's a good percentage, actually.
Well, some people might say it's a good percentage, but that still doesn't solve this problem.
No,
Right,
it doesn't solve it, but
Right, it doesn't solve the problem, and it doesn't solve the haters, right? They're like, oh yeah, this guy screwed me over. Well, sorry. Just doing business here, but you know, reality sucks. It's not like we meant it. What do you feel for the lenders involved? Because you guys are potential lenders in the future. For other people's deals, for your own deals, for, you know, you're going to get other lenders involved in your deals. How would you feel for them? How would you treat them in this scenario?
well, being on the lending side myself, I'd try to stay in contact with them and, let them know what I'm trying to do to get their money back. It's,
Yeah.
I
Try to
mean,
figure out some way to resolve it, so they're
yeah,
at some point become whole.
Yeah. Well, luckily for us, we're really good at communicating regardless, right? It's like everybody knows exactly what the hell's going on. Do they like it? No. Does anybody like the situation? No. All right. But we don't know what's to come until the houses sell, until this partnership is ended. It's always going to be a headache until that day, but 1 out of 5 is still great, apparently. So what do we learn from all this, though? Through all these failures, right? Like, what do we really learn?
Trust but verify and make sure that everybody's doing what they're supposed to be doing.
right.
Okay, so
And
lessons
when it
learned.
comes down to it, it's still your problem, and you got to resolve them. So,
Absolutely. What are some things that are advantages you gain of, let's say, working with multiple partners, whether you do a deal with them or not, or it fails or succeeds, right? Like, what are some things or advantages that you gain to add to your tool belt along the way? Because, well, first, let me ask you this. How many people in here have not partnered with anybody in any way, sorts, or form in here?
Me.
Cool. So, cool. So that just shows right there, right? Between what we have, half, not even half, but whatever, the amount of people we have in here too. And so it's like, that's a lot. Look at that percentage. 2 out of 5 we have in here, or 6. I can't see right now. But that's still a high percentage of you guys that still haven't done a deal, that haven't JV'd, haven't connected, that haven't whatever, right? And so when you look at that, it's like, okay, well, I haven't learned any lessons yet. So my job is to learn lessons from other people, right? At this point in time. I haven't gained any resilience to deal with these situations. Because whether you like it or not, the more money you make, the more stress you have, the more workload, the more responsibility, the more everything that you have will only get bigger and bigger and bigger. You're going to have a diverse portfolio. You're going to be, diverse in all your skills. You're going to enhance those skills. You'll gain different strategies from different partners. You'll take them to your own. You'll use them yourself. You're going to adapt. Right? You're going to gain all the resources of those partners because you JV'd with them, because you partnered with them, because you connected with them. If you partner with them, you technically gain their credibility. Maybe they sponsor you. Maybe they improve your reputation. You grow as a person. So when I see stuff like this that's happened in my past and that's happening now, I'm like, okay, I know I'm going to grow. Was some of it my fault? Probably. Am I the best person in the world? Probably not. Am I trying to be a better person? Yes. I hope so. Am I growing? Am I learning from my mistakes along the way? Yes. But everybody's got to start somewhere. So after hearing this, does that make you guys not want to partner with people? Because that's not what the goal with this thing was.
No, it's not going to stop me from partnering with people. How am I going to make any money or help other people make money if I don't partner?
If one thing I hope you gained out of this was just do your due diligence. And even though you do your due diligence, 6 months later, you'll see the reality. But do we chance that reality?
Yeah.
No, but I'll proceed with extreme caution. I like that. We're going to fail. We're going to succeed. But if the outcome is you came out positive, net positive at the end of the day, you won. Because we say things like, oh, get 1% better every single day. When you partner with somebody, you're not getting 1% better. You're getting like 200% better. But sometimes you lose. But overall, have we still gotten, 1% better over time? Have we still gotten something along the way? Absolutely, we have. It could be just you partnered with somebody that was a scumbag, but they were really good on the phones and really good at raising money because of their personality on the phones. But at least you learned a skill from them. How easy it was to find the resources, the leads, to then target them, then to raise money. Steal the information. Because think of it like this. Our goal at the end of the day is to find a partner that's ideal and that will last a lifetime. What businesses do you know where both founders are still intact till this day? Only the
real successful ones.
Real successful ones, right?
Yeah.
So either A, you build a really successful business, and you build the right team in place, or you continue in doing like the minor things, the JV, the connecting, the whatever, right? And then you're going to have failures along the way. Again, my reasoning for this was not to scare anybody. It was something that came up because There's a lot of groups that are going on right now. They are purposely trashing people. Purposely trashing people. And that is, called defamation. That is called slander. That is illegal. That is, but people still do it. But what is it doing to people? It's ruining their reputation.
Right. And the problem is, there's always two sides of the story. Just because, they're telling their story doesn't mean that the person's not out there trying to help them.
Well, here's the thing, right? I've
Yeah.
seen so many people on these groups tell their side of the story and everybody apologizes. Well, sure, everybody apologizes. Guess what? If you don't know the facts 100% and have proof, you cannot legally put anything on the internet, right? Like that.
Right.
You can get sued. Like realistically get sued, and you can't hide from social media anymore. Once you put that post, it's gone, it's done, it's out there. Because you just hurt a business, you just hurt a person. All these people that screwed me over doesn't mean I'm gonna, defame them.
Yeah, just not going to work with them again.
Yeah, don't work with them again. If someone comes to me personally and says, "Oh, by the way, I plan on dealing with this person," I'll be like, "Oh, I dealt with them. I'd recommend not." That's the end of story. Like, it doesn't need to be a big ordeal in the public. Not everybody can come out like this in the open, right? Because nobody will. But then again, no one's like really me, where I just don't give a shit. I'm not gonna say everything publicly anyways.
About that, actually, so with the recent semesters that Pace put up with the security one with Mel.
The safety one.
Yeah, the safety one with Mel. I don't know if you watched any of that, Mo, but do you, yeah, okay, so the thing that she put out there is like, it's you have to pay money to get into her, I guess, her system, and it will let people know if they've done any, if they've, how many relationships they've been in, how many deals they've done, and all that kind of stuff. So I don't know how much that will, I mean, you said in your one example, you worked with someone for 1 year, made, over $1 million. So I would just, things change with people. You never know what might happen in somebody's future, how they might change.
Yeah, but here's the difference. This person, this partner, this whatever, right? At the end of the day, is still a really good person. They made a mistake. They screwed up. They became lazy. Does that make them a horrible person? Did they intentionally try to steal? They intentionally try to do harm to anybody else in business? No. The one guy did that for the other business, but everybody else, no. And so when you look at it like that, people take whatever they feel like their emotions because they suffered something, right? They lost money, they did whatever, and they're going to throw everything negative and tell people they can't work with somebody. When the reality is, this person has learned their lessons. They're never going to do this shit again. They're never going to be lazy again. Doesn't mean that someone shouldn't partner with them. You know what I mean?
Yeah.
It's just, I'm not the right one anymore. You ruined my trust.
Right.
But it doesn't mean that you need to make this public and do some paid group where you join and you can find all the people that are blacklisted. Like, that's horrible. Honestly, that's horrible. I don't care what's going on. It's like, you still don't do that. Because technically that's still defaming. That's illegal. I may not be a lawyer, but I know certain regulations, right? And what's the do's and don'ts. I'm a heavy marketer. I know what I'm allowed to post on social media. I can't even say something like, "Hey, if this doesn't work, I'll give you 10 grand." On social media. You can't even say that. "Oh, buy my service. If it doesn't work, I'll give you 10 grand. Like, you can't even say that. Like, there's certain things you can't do online in the public. But people don't care. People are trying to make money everywhere, any way possible. And it's like, okay, it's cool. You could be a scammer. You can borderline gray zone, black zone, be under the radar of the government and try to sell a service. and get away with it, what people do, because people are interested in it. Oh, I want a list of people I shouldn't do business with. Well, yeah, typically when you're on a Zoom with somebody and let's say maybe you meet them in person, you can kind of get a feel if someone's good or not. Especially after you've done multiple deals, multiple partnerships.
Right.
You get a feel. Now, if you're just starting out, you probably don't have that feel yet. But you've dealt with people in your past. And then before you actually do a deal with them, you do enough research at that point. And you ask people around, have you done a deal with this person? Have you done a deal with this person? But it's not like, oh, I need to go find a database of the don'ts. Again, I don't know what's this semester
Oh,
thing.
yeah, to be clear, I don't believe it's not a blacklist. It's more of a list of just to show like the deals that you have done. So you're just like, okay, this is a competent person who, I believe that's what it is. How many deals?
Oh,
someone's
so
been
it's showing all the
involved with.
positive deals, all the deal flows
Yeah.
and stuff too. Got it. Yeah, my bad.
Yeah, it's more of a background check than anything.
Well, okay, I'll use an example. I joined sub 2. I only use the community. I've never communicated, I've never really attended any live Zooms. I only watched what I need to watch. And I don't really fill out any forms that they send me because I'm a marketer. I know every single one of them is used for marketing purposes. So does that mean I'm not on that list? Probably. I didn't even know about this list, but cool.
Yeah, no, this is. She actually set up her own business where she used to be a investigator for the. I think she
FBI.
was in the Navy. Yeah, the FBI, but she was
She
in.
was Naval Intelligence and then FBI.
Background check
So
and credit check, Wes. Okay, cool.
Yeah.
But it's like, okay, well, let's say you were to lend money to somebody. Do you not do a background check and a credit check anyways?
Yeah, a couple of the
should.
deals I've lent on, I've called the people that they've had loans with before, PMLs they've used. I've asked them for that information, so see if they got paid back.
I'm
and-
okay with background checks and credit checks. It's just
Yeah.
be careful what you personal guarantee is the main issue.
Right.
Because remember, you have a business, you have an LLC, you set a corporate structure, you put yourself with anonymity, you did all this cool stuff for your business, and you paid tens of thousands of dollars to set up if you've done it right. Why would you personal guarantee you have a business that can guarantee something? I'm all for giving you my credit. I'm all for giving you my background. You can swipe and do whatever you need to do. You're just not getting personal guarantee of my personal assets because that's not fair. We're running a business here, and other people might disagree with me there. All right, like I just don't give a shit. That's like I don't ask my private, people I lend money to for a personal guarantee. It's like I don't expect them to. Now, do they have a business property on that can take collateral? I'll do that.
Yeah.
All day long. You don't have that, and you're asking me for $200,000. Well, then give me something else that you can guarantee that's in your business. You don't? Well, then I'm sorry, I don't want to do a deal. Oh, but I have this personal house. Well, that's up to you at that point. Because here's the thing, you can climb up the ladder and you can build your business credit and you could start doing deals. It's like EMD. Realistically, a lot of you guys are gators. The only people that need gator money, EMD money, are people that are broke and can't even do a wholesale deal. That's the reality. With the exception of, let's say, the bigger deals, $50,000, $100,000 EMDs, double closes and stuff like that.
Right.
But the $500 to $5,000 EMDs, if you can't afford that and you need gator money, it typically means you don't do deals.
And most of those
are
don't close
risky.
anyways.
Yeah, they don't close.
Because they don't have a buyer before they
Yeah. But since when do you see people like, for example, me or anybody else ask for EMD that are actually doing deals? Pace jokes around, on some of the deals just to kind of promote Gator. But he doesn't really need EMD for his deals.
No, he doesn't, but he does use Gators so he can promote.
Of course, he uses to promote his service, right? This
Right.
is all a ploy, right? Just like if
Yeah,
I were to
part of
make
his
a post
business.
and say, "Hey guys, go join Built," right? If you haven't already done so, If you're in sub 2, go grab a discount. Well, that's promoting, right?
Right.
Oh, by the way, if you use this system, you can, send offers out really fast. Well, okay. I'm promoting, right? It's like, oh, well, I'm going to go use this Gator lender over here who's going to fund this deal for me. And I have to put $0 out of pocket. By the way, go to Gator, gator.com and, go join my service. It's like, at the end of the day, it's all promotional when we do
Right.
stuff. I'm a marketer. He's a marketer. We're all marketers when it comes to being business people, because here's the reality. You're in real estate. You're a marketer. If you're not a marketer, you need to learn those skills, because you need to learn how to sell a deal and you need to learn how to generate your own leads, which is all marketing. Whether it's wholesalers, whether it's agents, whether it's direct to seller, whether it's, I don't really care, right? Connectors, that's a marketing skill to acquire people, bring them in as a lead, as somebody who can bring you deals that you can do deals with. This is all marketing. I know when it comes to sub 2 or Astro or anything else, we don't use the words marketing. We use the words real estate acquisition, generating leads. But the reality is all marketing. Everything is marketing. We just use it differently. We use it to acquire instead of selling. But if I told you this, like, well, you can, acquire, let's say if you're good at acquiring properties and wholesaling, you did 100 deals last month or last year. It's like, okay, well, you probably could have sold a service and done the same thing. It still made the same amount of money. In fact, you could have made recurring instead of those one-time wholesale deals. You just learned the opposite skill. Still marketing instead of selling, acquiring. One makes you do a hustling job, right? Where you hustle and dispo a deal and you make 5 grand, 10 grand, 15 grand, whatever in wholesale. And the other one, let's say you sell a service that's recurring, is, consistent cash flow. But when we get into real estate, we just want to get into real estate, and we jump on wholesale. Just like the ultimate goal for everybody inside here is probably to build some sort of portfolio. Am I wrong?
Yep.
Anybody in here not want to build a portfolio? That's what I thought. It's like every single person that gets into real estate and joins any one of these mentorships, right? Or any of these courses or any of these communities, they all have the same goal in mind. I want that Wi-Fi money coming into my bank account while I'm on the beach because I have a bunch of properties. Cash flow. Yet who are the ones that are succeeding? Either A, they had a lot of money to begin with, or B, they know how to raise money, right? And they've gone through risky situations. Sure, they fucked up, but they're still successful, right? They know how to handle situations, whether it's gone bad or not, because no one has done a deal that has not gone bad. If you do 10 deals, one of them is going to go bad. That's just normal. But we got to continue, right? The end goal is to get that cash flow. Well, there's multiple ways to get cash flow. And along those ways, you're going to make mistakes. I hope today was helpful and not demotivating. I had fun, honestly.
No, it was a good one. I mean,
It was good. Thank you for your honesty, I'll say, telling us about your experiences.
I
look forward to it.
don't really care, honestly, about being shameful, right? Or being embarrassed. I don't care for those kind of things, because if you notice and you listen to my content, it's like, I really don't care what people think. I'm going to do what I need to do to be successful, right? And if things fail, well, then I'll just do what I need to do to make it work, right? Like, that's just how the mentality should be if you want to continue growing. And my perspective doesn't mean it's for everybody. Just like I'm married, I have 2 kids, but I still work 14, 18 hours a day. I'm in Florida right now. My wife and family are in Georgia. I'm here for like 2-3 weeks at a time, fixing problems on properties. I'm going to do what I'm going to need to do, right? For growth, for future, for everything. But not everybody thinks that way, right? It's like, why do we hesitate?
That's a big one.
We hesitate. Yeah. It's the biggest thing that happens on every one of us. It's like, well, why aren't we picking up the phones to call people to acquire their property? Why are we calling these agents? I'm going to go on YouTube and I'm going to go watch Pace's content. And I'm going to go do this instead of doing the actual work that's needed that will actually finally acquire me a deal to then dispo or to acquire it myself. Because it's hard work. I don't feel like making 100 phone calls today. When the reality is you make 100 phone calls, 20 people are going to answer you. 5 people are even going to be interested in what the hell you're talking about. And how long did it take you? 2 hours? 3 hours if you're slow? If you don't have systems, maybe 5 hours. Out of those 100 calls, you have 5 people that are interested and they really do want an offer from you. You make those every single day for 1 month, you are going to get a deal. You'll get multiple deals. That's just the reality, but nobody wants to do it. But yeah, that's enough of my little rant. I promised you guys I would keep this these Zooms as short as possible, but it is 9:07 here in Eastern. I am a morning person. Anybody have any questions before we end this today?
Is there a way that I can watch the previous ones that I missed?
On my YouTube channel, on that link I sent you.
Okay.
If you don't have the link, I'll put it in the chat for everybody else. You're welcome. All right, guys, I appreciate everybody for being here. As usual, I'll see you guys next week. In the meantime, there's that link in the chat. If you need to book a time with me just to chat or have a problem, I'll help you out. Go ahead and do that. With that being said, I will see you guys next time. Oh, how in depth are your JV agreements? They're PACES documents, and then we add additional terms, like a lot of additional terms. Wes? It just depends on what is needed, but we typically talk about what happens in this scenario, what happens in that scenario, how am I going to protect myself and so forth. It's like I took the default one and added basically a whole page and then just left it blank, a whole page. We can write whatever we need to write. Cool.
Yeah, these partnerships a little different depending on who you're working with, right?
What's that?
Well, each partnership might be a little different, right? So
it depends on what the
work
deal
it out.
is. It depends on what the deal is, right? If you're going to actually get into a partnership, you'd probably be best to do a company. If you're just doing a JV for the first time to test each other out, then you would do a JV agreement and you would keep that full page on whose responsibilities are whose, right? And what exactly needs to be done and what goals need to be achieved, right? And you would list every little thing. If this happens, do this, right? If there's any disagreements, we bring in a third party and we talk about it, right? Before we get into being nasty with each other, right? Like all the things, everything, right? I've done probably over 50 JV agreements. That just about, doing little deals here and there. So like, keep that in mind. Not one JV agreement is ever going to be the same.
Right.
Cool.
All right. Thanks, Mo.
You're welcome,
See
guys.
you next week.
I appreciate you guys.
Thank you.
Bye.
Night.